In September 2021, Cardano reached its highest valuation to date. ADA, the network's native coin, hit a price of $3.10. Today, it's trading under 20 cents. That is a 94% crash, erasing nearly all of the gains from that 2021 peak. Adding to the uncertainty, Charles Hoskinson, Cardano's vocal founder, has stepped back from public activity right as the ecosystem enters this period of turbulence. This raises a critical question. Is this the end of the road for a major blockchain, or the most significant discount available in crypto right now? When an asset with this history faces a panic this severe, we have to look past the old assumptions and reevaluate the project from the ground up. This diagram illustrates Cardano's position as a Layer 1 blockchain, a foundation built to compete directly with Ethereum for smart contract dominance. The network targets global utility, specifically for managing supply chain logistics and establishing decentralized digital identity verification. What distinguishes Cardano from its competitors is its reliance on peer-reviewed architecture. This involves formal verification, a process where network upgrades are mathematically proven to be correct before they are deployed. This is designed to prevent the coding bugs and exploits that have cost other blockchains hundreds of millions of dollars. While much of the crypto market moves by rushing experimental code to the public, Cardano follows a slower, methodical path rooted in academic research. This technical history is what makes the current collapse in market confidence difficult to reconcile with the project's original goals. This gauge chart shows the ADA token supply, governed by a hard cap of 45 billion coins. Currently, 36.2 billion are in circulation, over 80% of the total. There is no burn mechanism. The remainder is slowly released as staking rewards. Despite these predictable supply mechanics, the price has fallen to an 18-cent 5-year low. To find a potential turning point, traders are watching this line chart. The key level is 20 cents, a threshold that has turned from support into resistance. Reclaiming that 20-cent level is a technical requirement to signal any legitimate shift in short-term momentum. While the fundamental tokenomics are functioning as designed, the market sentiment has drifted away from the underlying math. There are two potential triggers for a recovery. First, the Van Rossem hard fork is expected this month, promising performance upgrades to the core network. Second, a grayscale ADA ETF is in development. If approved, it would open a door for institutional capital to enter the ecosystem through a regulated investment vehicle. However, the network is also facing internal decay. Recent governance votes have failed to pass, revealing friction within the community. Adding to the bearish outlook, several key projects within the ecosystem have recently shut down, citing the difficult environment. This all occurs while the project's founder remains absent from the public eye during a critical period of network turbulence. The honest take is that Cardano has a foundation of peer-reviewed code and a history of high security, but it is currently facing a real-world crisis of confidence. If you believe in the long-term potential of the tech, ADA is available on Binance and Coinbase, or via decentralized swaps like MuleSwap. As always, do your own research. This is not financial advice. Does the technical foundation outweigh the current panic? Let us know your price target in the comments, and subscribe for more deep dives into the markets.